wonderful introduction. So without much further ado, I'll call our distinguished panelists. I'd like to begin with Florence Lustman. She's the president of France Assureurs. Thank you. Christophe Bories, assistant secretary for financial regulation, head of financial sector department for the French Treasury. Thank you for being here. And Veronica Scotti, chairperson public sector solutions and group managing director for Swiss Re. Thank you. And we will be connected remotely to Kentaro Ogata. He's the Deputy Vice Minister of Finance for International Affairs for Japan's Ministry of Finance. Thank you for being here. Welcome. All right, so. I thought I called you, but Hannah Gurga, of course. Then you sit here. My bad. This was originally thought as a panel for one less person, but I apologize. And we mustn't forget Hannah Gurga, who is Director General for the Association of British Insurers. Apologies to Hannah Gurga. Now, here's the thing. We are also running slightly late. I know some of you have airplanes to catch. So we will do this with a first round of questions, as we had planned, and then perhaps a second quick round, and then we'll see how we stand, so that everyone is able to get to where they need to be. All right, so thank you very much. And I'd like to start with Florence Lustman, if that's okay with you, so to sort of set the scene of our discussion. So, as we know, there's no single solution to address the insurance coverage gap, but multiple options need to be considered, depending, of course, on the nature of the risk and of the institutional context of the countries. So, the question is, why has the current system been adopted in your country, and what have been your experiences of nationally adopted systems? Basically, what are the advantages and what are the problems of such systems? Thank you.
Thank you, and thank you for the invitation. The French NatCat system was established in 1982, so we've got quite an experience of it now. It's a universal, solidarity-based public-private partnership which provides coverage for individuals, for businesses, for local governments in case of direct material damage caused by an exceptional natural event. How does it work practically? The guarantee is automatically included in all insurance contracts that provide a damage guarantee, be it home insurance, car insurance, and that way the risk is really widely spread over more than 45 million contracts for motor insurance, or around 45 million contracts for home insurance. And this enables the system to have a very high level of mutualization, and I think this is exactly key for that sort of scheme. For the policyholder, for the victim of the NatCat, there are three conditions to be met if he or she is to be covered. First, a government decree must recognize officially a natural disaster in the municipality where the property is located. So this is the first condition. Second condition, there must be a direct link between the damage and the NatCat, which is recognized by the decree. And third, the damage must occur within the time frame which is specified also in the decree. And then policyholders must declare their claim to the insurance company within 30 days after the publication of the decree. Then, if needed, the insurer will appoint an expert to assess the link between the NatCat and the damage, and then he will proceed to payment after a deduction of a deductible which amounts at 380 euros. Relocation of the persons can also be covered if necessary, relocation up to 6 months. This scheme provides coverage for a number of exceptional NatCat, of course floods, marine submersion, soil shrinkage and swelling, landslides, avalanches, earthquakes, volcanic activities. But it does not cover other natural events, I would say, that can be sufficiently mutualized by the private sector. So I think it's also important to keep in mind that this forced mutualization is absolutely necessary when the private sector alone cannot provide the coverage, which is definitely the case for the NatCats that I have just mentioned. And finally, maybe the most important question for the policyholder, what's the cost of this coverage? And I don't know if you will believe me, until now, the average annual cost for individuals is around 25 euros. 25 euros per year to be covered against the consequences of very adverse, exceptional NatCat. Well, let's say this is a rather low amount, and each time I mention the price, I think many countries, many policyholders in the world would love to have that sort of possibility to get the coverage. True, government has recently decided to upgrade the premium just because of the financial deficit of the scheme, which is linked, of course, to the increase of the severity and the frequency of NatCat. But even with the increase, the average price starting in next year, in 2025, will amount at 40 euros per year for individuals. So I would say that I think this is a very good price to get the coverage. And to supplement that, the insurers, because of course we should always remind, and very unfortunately the news confirms what I'm about to say, that even if these exceptional NatCats, they create a lot of damages, they have huge consequences, it is first and foremost, it is a drama for the persons, and let us not forget that. So it's very important also to have specific procedures that we implement in the case of big events to take into account this emotional reaction of all parties, of course the victims themselves, but also local governments. So we provide a lot of help and support locally to try and help the policyholders to go through these terrible events in the most fluent way.
Thank you. No, that's super interesting because you've really set the scene for what the issues are and the problems. So we'll stay in France then, and I'd like to ask Mr. Christophe Bories, from his point of view, so from, of course, the financial ministry, what's the situation in France, and if you can give us an overview and how you hope to face the situation going forward, because we just heard these catastrophes are happening more and more, and private sector can't do everything.
Thank you, and it's a pleasure to take part to this panel and to demonstrate our public-private partnership with Florence Lustman, even on stage. Regarding the situation in France, I mean, we heard all the speeches, and everybody agrees that there can be no denial of the gravity of the situation and of the rising risks, and it's exactly the same in France as in Italy, for example. We saw the catastrophes in Emilia-Romagna. Last year in Pas-de-Calais in France, we had the same kind of every 2-3 months, again, flooding coming back with each time a lot of damage. So 2023 for us was a very peak year in terms of damage, but unfortunately we know that it's not a peak, that it's not going to be repeated. Quite the opposite, actually. The central piece of our system, the Caisse Centrale de Réassurance, so the publicly owned company offering reinsurance for the CatNat system, estimate that this increase of claims will be on average, well, it depends on the scenarios, of course, of climate change, but even in the most benign scenario, it would raise by almost 30% in terms of claims between now and 2050. as a yearly average. And on, of course, the worst scenarios, it could go all the way to 60% or more rise of the needs of the system. The cumulative damage from now to 2050, as compared to of course, the same period before, is around twice the amount. So it had been like 74 billion damage in the past. It should be around 140 billion more and more until 2050. So there's a strong need for this system, and that's why, as Florence mentioned, we made the system evolve, because of course there has been a lot of discussion, do we need PPPs? Well, we have one, but yes, but even with one, we had to make it evolve, and that was the point. Of course, there was the very classic, in a way to treat the problem, which was to raise the premium, as we did, as Florence was saying, and now we will have the famous 40 euros and not 25 per policy holder, and that's something, but that's, let's say, just a financial measure. We need also to have more clarity on what exactly we are trying to cover. So that's the whole assessment part, and also the prevention part that we are also much supporting. Regarding the assessment, the minister, well, the former minister, last year launched a mission to establish the situation, because there was anecdotal evidence that in some particularly disaster-affected parts of the country, there could be some growing insurance gaps. But of course, we need to have more precise data than that. So we start this issue. We created an observatory of climate damage and climate coverage. So we will have these elements and this data to be able to understand and make evolve our system. Not, of course, to have punitive measures for insurers or for other actors, but to have incentives, basically, when we identify zones, areas where there is a particular issue, where sometimes the offer is already a bit limited, to be able to identify this problem and these problem areas, to be able to provide incentives, including tax incentives, for players that would engage and would try to be present in these zones. So that's part of the effort. Of course, there is also the prevention effort, because, well, it's a cliche, but it's a very valid one, that it's always better to have the opportunity to finance prevention adaptation measures. So we have a national adaptation plan that is being built. And again, if we have a clear picture of where the problem zones are, we'll be able to develop better these adaptation situations and to provide regional coverage, to support local, regional initiatives, to again reduce, for example, the problems lead to flooding. There are also, because we talk about national catastrophe, and oftentimes we think it's always, brutal, violent events, and of course sometimes they are. But for example, we have a very strong issue in France regarding to droughts, and sometimes that takes a long time to develop. The swelling of clay soils and reducing is something that can affect negatively almost 50% of houses in France. Half the houses in France may have a problem at some point because, the walls will begin to have some issues because of droughts. And that's not happening in 1 year, of course, but it's over and over the years. This is a climate-related problem. And of course, when 50% of houses are concerned, it's not about having a system that is able to cover it directly. So once again, prevention is important, working together with insurance, with the CCR, so they are publicly owned company, and try to develop these measures.
Thank you. So it's really nice to see the public-private partnership here. So let's move to the UK then, to Hannah Gurga, Director General of the Association of British Insurers. So you're here alone, but representing everyone. I would like to ask you to give us your context for your country, and so what are the challenges, and if you can talk to us a little bit about the public and private solutions adopted in the UK, and give us a few reflections on the positive and negatives.
Well, Alessandra, thank you so much for your question. And I'd like to begin by saying how pleased I am to be here with such an illustrious panel, but to have the opportunity to talk about this very pressing issue of what we can do collectively as insurers, government, regulators, but also as citizens to tackle this risk of climate change. And so the experience I'd like to talk about in the UK is Flood Re. I'm sure many people in the room have heard about Flood Re, but I thought, having listened to the presentation from the OECD and the IAIS about the design and objectives of public-private insurance partnerships, it would be helpful to talk about the objectives of Flood Re, the design, but also some of the reflections about what's worked well, but what are future considerations that may be helpful for our consideration today. So Flood Re was established through legislation in 2014. And it came about because over a period of decades, the UK had experienced increased flooding, both in frequency and severity. And we had reached a situation where some households could no longer secure insurance, or if they could insure, it was very expensive and it would have quite a high excess. So the industry and government came together to look at solutions, and the concept of Flood Re was born. Flood Re is a reinsurance scheme. It operates commercially, so it launched in 2016, 2 years after the implementing legislation, because it had to secure regulatory approval, it has prudential requirements, so it does compete with other reinsurers. And the legislation sets out two objectives. The first is that Flood Re must help to ensure availability and affordability of insurance. But importantly, Flood Re must also manage the transition back to risk-reflective pricing. The operation of Flood Re, it's funded by industry. It's a levy on all insurers that offer home insurance in the UK, and that levy is £135 million a year. Insurers choose which policy to cede to Flood Re. They pay a premium to Flood Re if they cede the policy, and the premium is calculated not on the flood risk of the property, but on the council tax banding. So that is to help make it more affordable for the customer. And Flood Re also has capped the excess. So before Flood Re, if you had a flood in your property, your excess could be in the thousands of pounds, but now with Flood Re, the cap is £250. So that's a bit about the objectives and the design. Has it worked? Well, I think by any measure, we can say, yes, it has worked on improving availability and affordability of insurance. Before Flood Re, if you were in a property that had been flooded and made a claim, only 9% of those households could get a quote from 2 or more insurers. Today, 97% of those households can get a quote from 5 or more insurers. And following the implementation of Flood Re, those households, 4 in 5 of them, saw a reduction in their premium of over 50%. So that's worked very well in terms of the financial impact on customers. But obviously what we can't address is the emotional impact. When flooding occurs, it is very distressing for the people who have to move out of their properties, sometimes for many, many months. Other considerations I think it's worth bearing in mind are around the scope. So we heard from Carmine about the trade-offs when you're thinking about these types of partnership. And in the UK case, one of the trade-offs was which properties are in scope. And Flood Re is only for residential properties. So it's interesting to hear about the Italian experience where the focus is very much on small businesses. In the UK, SMEs are outside scope. Buildings constructed after 2009 are also outside scope. And that was really to discourage new building in areas at a high risk of flooding. Unfortunately, that's been marginally successful because we actually have quite a number of buildings that have been constructed in floodplains, and even more properties are at risk of flood today than they were when Flood Re was established. I think the other aspect we need to consider is the customer awareness. I'm not sure we as an industry have really thought collectively what we could do to help make flood resilience as important to citizens as, say, energy efficiency. We all think about the energy efficiency of our homes. How often do we think about flood resilience? In the UK, I was astonished to see that people who have already been flooded, only 30% know what they would do if a flood recurred. So there's a big opportunity for us to work together collectively to help educate and make people think about what they can do to create a flood-resilient property. Alongside that, in the UK, we have a very nascent market of property flood-resilient measures. The new government has come in the last 2 months. They're very focused on flood resilience, which is positive, and they see this as an opportunity to help achieve their growth mission. If we can create awareness amongst citizens of the importance of protecting their own properties, that will generate demand for new types of flood-resilient measures. That could create a new industry. So again, I think there's a lot that we have achieved with Flood Re in the UK context, but some important reflections, including that objective of transitioning back to risk-reflective pricing. By law, Flood Re will exit the market in 2039. And I think there's a lot that remains to be done before then for us to get back to that risk-reflective market.
Thank you. Now, that was super interesting, particularly how you said that some people consider still natural catastrophe one-offs, and often they are, depending what the situation is, but so many times, like floods, they are not. It's something that can recur, especially if they build in areas where that happens. So that's something else to consider. So I'd like to move the conversation on to Veronica Scotti. Does she have a microphone? Yes, thank you. And get, of course, your perspective on what we've heard so far and what the situation is from your point of view.
Thank you. And also, I want to thank everyone for the invitation. And I'll build on one point Hannah did not mention. It's one of the few schemes, Flood Re, in the world where actually building back better is part of an explicit arrangement. And I think this point of being explicit and having an understanding of how that will work creates actually a very good incentive systems. And even there, the pickup rate has increased, so congratulations. I guess I'm here because I actually work on public-private partnerships with governments around the world around this stuff. So yes, I've touched many of the programs that have been mentioned. Let me start with a positive comment. I think there is a real momentum in this space. The fact that the OECD and Carmine was pointing out at my comment yesterday, we don't have to be ingenious about it, we just have to do it. And I think the work that the OECD has done in this context really helps give legitimacy and mainstreaming things that are happening and in building more capacity and knowledge and capabilities for all of us to really work at this effectively together. The protection gaps, however, are very big. We've seen it, 60% still there. So it's a very substantial gap to close. And I'd say there are a few considerations why this is not moving as fast as we wished, but I think it's picking up momentum. First of all, let's admit, public-private partnerships are difficult. They're there, as Florence said, when we don't find other measures to get it done more effectively. And that means meeting of languages, meeting of cultures. So why don't they, what are the challenges we typically see? I'll mention five very quickly. Culture and behavior, a moving target versus the hope that things can be static, the conundrum between investment and cost, and then incoherence in the way things are developed, and I would say oversimplification. I'm going to be very quickly going through these 5 points, I promise, super fast. On culture, I think we have the maximum momentum of political willingness to do something after an event because populations are shocked. And so there is this ugly say, but it's a true say, let's not waste the catastrophe. However, it takes time, sometimes years, to get the operational capacity on the ground from the administration side and to get that momentum sustained. So my word of encouragement here is, let's not just look at the catastrophe as it happens, let's use the bridge between that and the next catastrophe to actually get ourselves set up to do things properly. Second thing, as I said, the moving target. It is, we have now better awareness of climate risk and their consequences, but the reality is that insured losses and economic losses are just growing exponentially. And the reason is because exposure has been increasing, plus there is some climate component in the longer term. And how we build, which is a bit where Anna was also going, makes a huge difference because that drives vulnerability. So what we're really seeing is these losses, insured losses, have been growing on average by 7%, and GDP globally has been growing at 3%. So the gap, if we do nothing else, will widen and will always be in catching up mode. And what used to be secondary perils, which frankly means something that we could just give a fixed loading to, have become a dominant percentage, over 60% of lost drivers. There is a good news there. We have been developing the knowledge, the capability, the risk assessment tools to take care of those, to be able to effectively intervene through public-private partnership, ensuring that the risk-adjusted pricing can actually take place at individual property level. But that's also, I wouldn't want us to walk away from this conference thinking that without this joint interventions on this moving target, we put in place a PPI scheme and we're done, because the reality is that scheme needs to have its own long-term sustainability, financial sustainability, risk rebalancing over time. Then the next topic around investment versus cost, everyone looks at insurance as a cost, but I actually think it is a price on risk. And it's one of the biggest incentives in actually risk reducing. And we do know that it's $1 of investment and $10 of resilience that is built. So what can we do to create a system of positive incentives across all of us? That's why I wanted to mention the Building Back Better element, because, you know, at the moment the government is going through the quinquennial review for flood re, but there is a $10,000 contribution to reconstructing after an event to higher standards in the flood risk scheme. And that is deemed no longer sufficient. We maybe need to top it up. There is a desire to go there. 75% of insurance companies in the UK that are part of the scheme are actually offering that. That was not the case even 3 years ago. So having this explicit agreement allows us to have that the beautiful leverage actually implemented for real, very fast, because we have the platforms to do so. And maybe last but not least, as I said, incoherence and this point of oversimplification. Incoherence is actually manifesting itself between this desire to do this, you know, really important work together, but not having the right policy in place. For instance, data protection. It's very difficult to get information from government around, you know, the perils and how the municipalities or the local provinces will be giving permissions to build. This is a system of incoherence. We need to align. If we have a unified view of the risk, a common shared view of the risk, we can all be more effective together. And oversimplification is simply to the point that not one program will really work everywhere. One way is doing flood re as it was done in the UK, where there is a very strong penetration of insurance and customer coverage. And another thing is doing it in an emerging market where distribution, technical competencies, education are dramatically different. There, a more publicly dominated and sponsored scheme is the way to go to get the protection gap closed faster.
Thank you. Thank you very much. All right, so I'd like to close this first round by asking Ogata Kentaro, the Deputy Vice Minister for International Affairs of Japan's Ministry of Finance, to give us his point of view. If you could, give us an overview of the situation in Japan that relating to climate change and natural catastrophe risks, and how you're facing it and hope to face it going forward.
Okay, well, thank you very much. Hello, everybody. I'm sorry that I have to join remotely, but good to see you all. Thank you very much for your questions. But in answering your questions, I would like to talk not just about Japan, but also Japan's initiative in the region. And then I would like to argue two major points. First, it is quite important to have a very broad-based public-private partnership, not just the PPIP. And secondly, regional approach is very important. Given that many NatCat occurs in EMDEs, we have to think about how we can effectively help those EMDE to cope with NatCat. And some countries may need technical assistance. So the regional approach would provide a good platform for learning from IFIs and also from peers. And the countries may also need risk pooling. So that's the benefit of regional approaches. But let me start by what we have done in Japan, taking the Japan's earthquake insurance as an example. Everybody knows that Japan is quite prone to earthquakes. And there are regularly thousands of small earthquakes every year. But the massive earthquakes are not that frequent, but not uncommon either. The problem here is that the providing insurance against earthquake damage is that the frequency and the size of earthquake varies quite significantly, while the massive ones could cause extremely broad and severe damages. Therefore, the public support is quite necessary in two reasons. First, to provide a mechanism that is fiscally sustainable over a very, very long time horizon, beyond any private company can possibly cover. And secondly, to provide financing to pay out claims beyond the private company's financing capacity. In our case, the public support is done through government reinsurance and the pooling of reserves. And then as for the limiting the extent of the coverage, the earthquake insurance in Japan is focusing on stabilizing the livelihood of those people affected by earthquakes. And it does not directly aim at rebuilding the damaged buildings. So this will limit the coverage, but this will leave a big challenge for us to, of course, financing the reconstruction itself or building back better after the earthquakes. Let me explain how exactly Japan's earthquake insurance shares risks between private and public. First and foremost, the earthquake insurance is based on private insurance, and it is structured as an optional addition to fire insurance. So everybody has to have fire insurance first to have earthquake insurance. Then building on that public contract, the government reinsures the earthquake insurance liabilities undertaken by such private insurance companies. And in an event of a massive earthquake, government reinsurance will pay out above certain threshold amount of liability that private insurance companies underwrote. More specifically, there are 3 layers of public-private risk sharing. The first layer, up to amount equivalent to 2 years worth of insurance premium revenue to private company. That layer, 100% of the liability will be paid out by private companies. The second layer, beyond the first layer and up to half of the expected amount of accumulated pool of reserves, the liability will be split 50-50 by public and private. And the third layer, above that, second layer, 99.5% of liabilities will be paid by government. So you see that if the size becomes bigger and the damage becomes larger, then government will take up more share of the risks, whereas the small and medium-sized earthquakes, most of the liabilities will be taken up by the private. And then we also set the cap for the total amount of reinsurance to be paid by the government for a single earthquake. And that cap will be decided by our Diet, our parliament, every fiscal year. By the way, that cap is currently at 11.65 trillion yen. And then combined with the liability to be covered by private insurance companies, the total amount of the coverage will add up to 12 trillion yen. That's about 2% of our GDP, so that's quite a sizable amount. This limit of total payout is being set at a value that can accommodate massive earthquakes at a level equivalent to that of the Great Kanto earthquakes in 1923. And then for your information, that limit was comfortably accommodated the Great Hanshin Awaji earthquake in 1995, and the most recent Great East Japan earthquake in 2011. So we set the cap really high, but we needed a cap to make the system fiscally sustainable. And then my point is that this balance of risk sharing between the private and public took many, many years of experience and the negotiations. We now come to this delicate balance. But also we have been making another tremendous efforts to make building earthquake resistance and, for example, to limit the damages itself. So as I mentioned up front, the broad-based approach is quite essential. That's our Japan's own experience. Just very quickly on the regional initiatives. We have two regional initiatives, one in ASEAN countries and the other in the Pacific Island countries. The ASEAN initiative is called Southeast Asia Disaster Risk Insurance Facility, or CDRIF, and that's a regional platform that provides participating countries with advisory and financial services to increase the preparedness and the resilience to the NatCat. And then I'll skip all the details, but the point is that this CDRIF initiative is based on the CDRIF Insurance Company, which is a general insurance company incorporated and licensed in Singapore. So it will use the private company, but owned by the initiatives. And then it will be combined with the technical assistance by the partner countries and also the partner multilateral institutions. And the same for the Pacific initiatives called the PCRAFI, Pacific Catastrophe Risk Assessment and Financing Initiatives. We established the insurance companies based in Cook Islands, and then we use the parametric approaches to the insurance so that the member countries can get a really quick and sizable financing when the catastrophe hits. And also to design the programs according to the country-specific needs. We also have the technical assistance features in this platform. So all in all, I would like to argue that the countries or the regions have to design the insurance scheme or the public-private cooperation in insurance very, tailored to their country's needs, and that's quite substantial efforts. We experienced in Japan, we are advanced economies, so we could do it alone, but for many developing countries, they cannot do it by themselves, so they need help. Therefore, we take those regional initiatives quite important. Let me stop here. Thank you.
Thank you. Thank you very much. Well, it's also a hopeful message, so thank you for your overview. I'd like to ask a question. I think I'm going to pile it together and ask both Florence Lustman and Hannah Gurga, since, France Assureurs and the Association of British Insurers. So I'll start with Florence and then move to Hannah. But the question is essentially, how can insurance through technology and innovation, for instance, help societies regarding climate change mitigation and adaptation? So how does that work for you?
So I'm very happy to have the opportunity of sharing with you a standout example that combines both innovation and technology. As Christophe has just mentioned, we have a serious problem in France with the shrinkage and the swelling of clay. We have a lot of clay grounds, and clay retracts with drought and then expands with rain, which causes cracks in the buildings. Today, nearly 1 house out of 2, which is 11 million houses, are exposed to this risk. In our risk survey, we try to assess the global cost of NatCat events on the next 30 years, the most dynamic peril is exactly drought, with a global cost that could be multiplied by 3 over the next 30 years. So we, as insurers, have decided to do something, and not only to provide coverage, because this is, thanks God, covered by the NatCat scheme, but we really felt the necessity to do something very practical. So we launched the so-called draft initiative. It is an initiative that will last for 5 years. We have selected 300 houses on clay grounds, of course. 200 of them already suffer from the consequences. So, of course, we repair these houses, but on top of the usual repairment techniques, we will test 1 out of 4 new technologies that can be effective in order to protect in the future these buildings from the effects of draft. We have also selected 100 houses which are built on clay grounds, but which are not, as of today, already touched by this risk, and we will also implement 1 of these 4 technologies. So in a 5 years' time, normally we should be able to identify the most performant technologies to improve the long-term resilience of these houses against this risk, which is, once again, the most dynamic peril for the future.
Thank you. So yeah, how does technology and innovation come to play in the UK?
Well, in terms of innovation, I'll just pick up on the point that Veronica made about build back better, because that is an innovation for the UK insurance industry in this space. It's betterment. So if you are a household suffering a flood, your policy's been ceded to Flood Re, if your insurer has signed up to build back better, you are not only made good to the standard of your property before the flood, it will actually be made more resilient up to £10,000. So that's one innovation that we've seen. But I think there's also a mindset innovation that is happening across the industry, and that is one where we move from a tradition of repair and replace to predict and prevent. And that's where technology is already being leveraged by the insurance industry. We now have very advanced Earth observation technologies that insurers are using to better map both pre- and post-event vulnerabilities, areas of risk. That's incredibly important. But there's also technologies that can enable us to engage with consumers. And here I think I'd be very interested about the experience in Japan, actually. I imagine in Japan there is a well-established mechanism for sending alerts about earthquakes, typhoons, flood. In the UK, we have that capability. Some insurers offer it as part of their policies. But if I think back to 2 weeks ago, I met with the new flood minister. She lives in a region called Hull. It is very prone to flooding. And she was complaining to me that only 11% of her constituents sign up to that kind of alert. So I think there's lots of technology that the industry is utilising and leveraging. But we need to work together to make sure that citizens and customers are also engaging with it proactively.
Thank you. Oh, that's super interesting. I'd like to move now to the 2 finance ministries. So a question for Christophe Bories and also a question for Ogata Kentaro, and I'll begin with Mr. Bories. So what's your view on the document approved by the Finance G7? If you could tell us a little bit more about that, and how can insurers contribute to strengthening the resilience of the economy and society against these increasing natural catastrophe risks?
Thank you very much, and I want also to salute my old friend Kentaro to be with us while it's very late in Japan. So, as far as the G7 documents is concerned, we are very pleased and very supportive of the leadership the G7 Italian Presidency has shown in this, because, of course, here we have kind of a consensus, but to be clear, in many countries it's not so obvious. We talked about emerging markets, that's for sure, sometimes it's a question of costs. But also in some other more mature economies, some people are quite resisting to the idea of PPPs. And indeed, to have this document from G7 that is at the same time adaptive, flexible, but still quite clear that in the end, we need to try and develop this kind of PPPs is very important. Because yes, there are different situations in all countries. Yes, the market is different, the players are different, etc. But still, I think in no country you can say, well, the market can take it on alone and it will work, or it will be all for public finance. Everybody knows public finance is not illimited, and everybody knows that sometimes there are market failures. And that's the whole point. That's the whole point, I think, of this document, is to point out that in some particular elements of the market, for some risks, we need this kind of partnership. I think we demonstrated a bit earlier that it can be not that costly for both parties, actually, and it can work. Of course, it has to be adaptive, but what can we do to reinsure those? And I think also in Europe, we also have this debate, as you probably know, in the European Union. EIOPA is working on this, ECB is working on this, the Commission has done a report, but there are still countries, still member states of the EU that are doubtful, in a way. So what can we do to explain to them the importance of this? I think we need to focus on the fact that, yes, we think there is a place for the market. Yes, a dominant one, actually. Yes, insurers are there to cover. We need to have that. We need to have mutualization of the risk, actually preserve the mutualization of the risk by insurers, by not sharing too much private data so that, you know, only good risks, in a way, can be insured. But there is a subsidiary role for the public money or for the public guarantee to be played out. And I think the whole concept of subsidiarity is central, to focus on that and say, basically, when there are some market failures, there is a distinct, precise role that the public purse can play. Thanks.
Thank you. So same question for Kentaro Ogata. How do you see in the document approved by the Finance G7?
Yes, I also would like to join Christophe, my old friend Christophe, in thanking the Italian Presidency for taking the lead on this very important initiative. And I had the same point as Christophe, but I skipped that. And I just would like to repeat my very first point that we have to take a very broad-based public-private partnership. And then we particularly agree with the document's argument that once risk and gaps are properly assessed, a combination of actions will be needed. And that's precisely my point. And then in all actions, we can have a public-private partnership. For example, the paper mentions about the improving risk awareness and the financial literacy. That's the area that we can, effectively have a good partnership with the private sector. And also the other actions include incentivizing and investing in risk prevention and reduction. Again, we can have a good public-private partnership in achieving that. And also the paper emphasizes that we should leverage available private insurance and reinsurance and capital market capacity. Of course, we have to do that, and then to do that, we have to develop the private insurance, reinsurance, and capital market. And then that's, of course, the much broader partnership with the private sector. But with all those actions, we can limit the damages and the risks of the NatCat, and then we can manage the risk nicely. And then we can talk about the public-private partnership in the PPIP. Those kind of broad-based public-private partnership would be quite important. That's our view. And then we are quite happy that the paper can describe those set of actions. So we really support that document. Thank you.
Thank you. So a question now for Veronica Scotti. So maybe quickly also, what's your view on the G7 document, but also really from the point of view of Swiss Re, have European economies become more resilient to the current environment? Like, how do you see that?
So on the document, I will repeat, I think it's fantastic that we have it, and we should just all work on implementing its broad recommendation in each and every country, everyone focusing on the areas that they want to elect as the starting point, okay? So we can then do more and more and more. I maybe build on one element of the recommendations, which is this point about preparedness and risk and loss reduction, right? Because it's an element that was emphasized where we have the biggest gap. I think one of the speakers before highlighted that. I think there is, again, I'm going to try and use the carrot instead of the stick. There is a tremendous opportunity for us to work on that, again, in a PPP spirit. What do I mean by that? Once flood became a prevalent risk, as an industry, in many countries, there was no flood cover 10 years ago, 20 years ago for sure. We developed the methodologies, we developed the probabilistic models that allow us to actually price this accurately. At this point, anywhere in the world, we can offer flood cover. I could not stand on a panel 10 years ago and say that with confidence. We can do that now. So for me, that's fantastic because it shows the industry is meeting its moment with the biggest driving risk driver for our economies. And it's important that in that conversation, we mirror it with what can we do for risk reduction, including new material, new standards. We heard clay is a problem, subsidence is a problem. So we need to recognize these new materials, this way of constructing, in the way we also insure, so that we create an incentive for those to be adopted more. Secondly, Europe specifically is currently covering a third of its adaptation requirements. It's 971 billion per annum that should be invested. We are slightly above 300. So industry can, and it has trillions of climate transition related expenses. I think the industry can be a co-investor. We have an opportunity to also de-risk all these big investments. We've done studies which show there is a huge cost-benefit ratio when investing in adaptation. So creating mechanisms through which the industry can use the other side of its balance sheet, I think is also important. I'll give an example that is non-European based, but through the Insurance Development Forum was mentioned before, we have created a blueprint for investments in emerging markets for infrastructure where they don't even have it. So I think that will be a tremendous additional opportunity. Last but not least is the use of technology on a very big scale across the aisle. As Swiss Re, we won a mandate from the government of Canada to do a risk portal for the entirety of the country, including remote territories, northern territories, with the idea that any individual in Canada can go and look up the risk. That will also inform local authorities in their lending permit and the way it is constructed. Of course, it's very delicate because, especially in North America, taxes are levied on properties. And so, you know, if you don't give permission to build, you lose a tax revenue, but you're also avoiding a liability longer term for climate litigation. So there is this timing element that is very important. And with that, we will build a flood pool in Canada for the highest risk properties that will have the spirit of mutuality and elements of resettling, for instance. But you need a common view of the risk. Another thing that is on the horizon, we all know it, is wildfires. Europe has suffered those. We have entered a partnership with Google X to be able to do predictions few weeks, if not months in advance, so that we can do that loss reduction very early on and empower other part of the agencies, in this case, you know, civil protection, to actually have a fast deployment. Third example, for Switzerland last year, we developed a claim management platform for earthquake. It's the one risk that they have protection for, but it's excluded. All the other natural catastrophes are included, not earthquake. And it's the one where they knew they wouldn't have just by government themselves the capacity to do quick administration and interventions. So we developed this claim management and loss adjustment management system that takes all modeling that exists in the world, geocoded and assessed all assets in Switzerland, and it's a public-private partnership including banks, insurance companies, and the government, so that we can be very fast at intervention. And these are just some examples of the things that we can do to actually make big step forwards in adaptation.
Thank you. So staying on the issue of resilience and steps forward, I'd actually like to move to Hannah Gurga, and ask a similar question. So how can insurance contribute to strengthening the resilience of the economy and society, of course, against all these steadily increasing risks?
Well, I think that question really gets to the core of what insurance is for, which is fundamentally making society more resilient to these types of event. But I think there's a huge opportunity around co-investment, looking at that other side of the balance sheet, to help with incentivizing this ex-ante risk reduction. As insurers, we can help to de-risk these large-scale infrastructure projects that are going to be necessary globally if we're to hit our ambitions around climate change, but also for life insurers who have that long-term patient capital. They're in a position to also be able to invest, but here we've got to make sure we have got the balance of risk calibrated appropriately, and that's why in the UK the ABI has been working with the Treasury to look at new models of blended finance to see how might the insurance industry be able to play its part. So I think we have a huge opportunity to support the resilience of society, but I also, just playing devil's advocate slightly, because I hear there's quite a lot of consensus in the room, we all agree that the G7 framework is very positive, that these schemes, if they're specific to the needs of the country or the region, can work very effectively. But I think about the UK context. Flood Re has been effective in making insurance cover more available and more affordable, but it does not tackle the root cause of the problem. It has not stopped flooding. Climate change is making flooding worse. The government has increased investment in real terms in flood defences and flood maintenance, but that is simply keeping the risk profile the same. It's static. We're not actually reducing the risk. So I think there's something incumbent upon all of us also to work collectively towards how do we find a way together to really reduce the risk arising in the first place.
Thank you. Yes, absolutely. So I think we just have time for very quick last questions. So for Florence, Lustman, how can insurance through investment help societies? That would be my question for you.
Yeah, so thank you for the opportunity to remind that insurance companies are the biggest investors in Europe. For example, let alone in my country, we have 2.5 trillion euro assets, which are invested for 63% in the real economy, in the enterprises. We have 24% of these 2.5 trillion euros, which are invested in capital in the industry. So there are a lot of discussions in Europe these days, whether through capital markets unions, Letta report, Draghi report. So let me just remind that if you want to promote Europe competitiveness, Europe sovereignty, then just promote insurance, and in particular life insurance. So let me remind that more than 80% of the assets of European insurance companies are invested directly in Europe. So this is sovereignty. This being said, of course, with all these amounts of assets, we have a lot of analysis. More than 80% of our assets are assessed according to ESG criteria. More than 2/3 of the assets are subject to biodiversity footprint analysis also. So we are really direct actors of adaptation. One wish, if I may, we know that we need to fund more sustainable infrastructures in Europe, for example, but at the same time, we need to have profitable investments. So I think this is a key question, how to make sure that the investments which are definitely needed for adaptation are at the same time profitable, and maybe some state guarantees or some things of governmental effort has to be put in the loop, because this is together a real challenge to make sure that all these investments, which are definitely necessary, they must be profitable, because we protect the policyholders and the savings of the policyholders. So we need to have profitable investments.
Thank you. Of course. So last final question, as we get right on time to the end, for Mr. Christophe Bories. So speaking of the European Union regulatory bodies, how can these bodies facilitate the introduction of this mixed public-private regime that we're hoping for?
Well, thank you. I think the mission letter for Commissioner Hoekstra that was revealed this week is mandating him to improve preparedness for climate risk in the EU. Well, that's a broad mission. Clearly for us, that means insurance. That means conforming to this kind of mandate, to this kind of mission that the G7 document has created, and that's we need to have this kind of schemes that Does that mean a EU-level scheme? Frankly, I don't think so, because it's probably too difficult and too controversial. But that means supporting and enabling with EU-level legislation what happens, of course, at national level, because the situation is very different on this. Of course, Italy, Spain, France have some very different schemes, but already existing ones, and some countries quite clearly do not have ones at the moment. So first of all, clearly what we need from the Commission is, and from EIOPA, is actually to have a strong voice in incentivizing this kind of schemes. And as Florence just mentioned, of course, that also means that the whole discussion regarding CMU that we are having at the same time cannot be different and cannot be separated from this discussion. Because if we are asking the private sector to have part of the burden, of course, with us through PPPs, but to play a role in this capacity, we need to have the sector being able to do so. And that means that the regulation, and in particular, the link with green finance, all the apparatus of green finance regulation, strong but sometimes heavy apparatus of regulation that we have created these last few years, is actually consistent with the possibility for the sector to actually invest in there. Thanks.
Thank you. Thank you very much. So that leads us to the end of our session. I'd like to thank very much Anna Gurga, Florence Lustman, Christophe Bories, Veronica Scotti, and Kentaro Ogata. Thank you so much for being here.